Good afternoon and welcome to the BACP Business Education Workshop webinar series. We have adapted our regular business education workshop webinars here at City Hall into these webinars until further notice. I want to inform you that business license can be processed online by visiting chicagobusinessdirect.org. All BACP offices are open to the public. Please be advised that masks are required in all BACP facilities and 6 feet of social distancing must be maintained at all times. If you are a part of the BACP Entrepreneur Certificate Program, you can get credit for joining this webinar by sending an email to bacpoutreach@cityofchicago.org. I will put that email in the chat for you. If you want to learn more about this program, please visit chicago.gov/business education. Also, you can receive targeted emergency alerts for the business community by opting in to ShyBiz Emergency Alerts. If you are interested, please visit chicago.gov/ShyBiz Alerts. We would like to encourage all attendees to ask questions. Please use the chat box and send your questions to all panelists. There will be a Q&A session at the end of this presentation. Today's webinar is entitled Plan for Success.This, presented by SCORE Chicago. Please welcome Hannah Fernandez of SCORE.
Thank you so much, Stella and the Chicago BACP team. We at SCORE Chicago always appreciate our continued collaboration. Hi, everyone. Thank you so much for joining us. My name is Hannah Fernandez, and I'm the chapter chair of SCORE Chicago. To give you a quick background, SCORE has been around as a resource partner of the SBA since 1964, providing free and confidential business mentoring for business owners across the country. So whether you are a new entrepreneur or you've been in business for a long time, our SCORE mentors could help you start, grow, and scale your businesses. To schedule an appointment with our mentors, go to our website at chicago.score.org. As a reminder, please write your questions in Q&A and comments in chat, and Erin will address them, and Stella will go ahead and either address them as well, type it in, or address your question throughout the presentation. Now, I'd like to introduce our presenter. Erin Libido is the co-founder and chairman of a global marketing consulting organization which serves senior management of Fortune 500 companies and assess these companies' market environments in terms of growth, technological threats and opportunities, and competitive positioning. Erin, you're on.
Thank you very much. Thank all of you for joining us this afternoon. I'd like to make some points, though, in terms of the process of this presentation. Most critical, from my perspective, are your questions. And those questions are going to be transmitted to me, to you, and from you to me as they're asked. So I will try to respond to all of them. I found that that's critical. And if I may suggest, there is no inappropriate question. Whatever thoughts you may have at that particular point, if my commentary is not absolutely clear, please take advantage of posing the question, and we'll do our best to answer each one as it's presented to me. We'll now move forward. Our table of contents basically, we'll discuss for a quick moment SCORE. I'm not sure how many of you really know of the SCORE organization. And then we'll talk about some questions that will be answered through the development of the business plan. And then a very critical section called our executive summary. If you ever are seeking funding from a third source, they will focus initially on your executive summary because they're probably inundated by people seeking money from them, and therefore they're only going to read an executive summary initially. If the summary turns them on, then someone in their organization will read the rest of your plan. So recognize at the end of your development of the plan, you're going to write that executive summary. We're going to talk about it a little bit through the course of the presentation. It typically was been known to be 1 page. I'd like to suggest you probably can get by with 2 or 3, but you're not going to go to 4 or 5 because they're not going to read a 4 or 5 page summary, and recognize again that they're inundated with these types of requests. Okay, then following that is the operations plan, which merely discusses the character of your business, and then a vital section called a marketing plan. And that really goes to the point of how are you going to generate your revenue and what alternatives you have to accomplish that. And then once you've done that, we're evolving the financial posture, and that's really one that's the end product of your effort here, and that is this a viable business opportunity? And we're trying to quantify that through preparing a pro forma profit and loss statement. In past presentations, the words pro forma are not always understood by our audience. That merely means a presentation of a profit and loss statement that is new. It is created, it's not based on past data, it's based on your forecast of formal data in the future. So that's really what the pro forma stands for in this context. The action plan is getting with it and making sure we move forward because we don't want to spend the better part of a lifetime in this context preparing a plan and then ultimately get the plan written. And then we always recommend that somebody who you trust and who you respect in writing a plan will review it. And we try to suggest mistakes that have been made in many of the plans we've read and therefore how we'd remedy these mistakes. And the addition to the plan in the last section really is one that says they're looking for your financials, a background on your specific posture, and why they should consider funding it. Speaking of funding, we really can talk about multiple sources. Obviously, one is your own, if you're going to fund the development of your product or service. Two, you may go to a bank and seek to borrow the money. Or three, you may approach a private equity entity, which typically gets very actively involved in the development of the business and becomes an equity holder in the business with you. They are, from my point of view, the ideal scenario in terms of getting a business support because they will bring someone on to support you to accomplish the end product of your goal. So those are really the opportunities we face. And I would play the role of someone in the business community who is not the banker, but I'm in the private equity mode for you and I will respond in matters to these situations as to what I expect they will require in a plan of this type. I've had the privilege of presenting this plan for some 10 years at SCORE, and as you see by the title, it's really focused on creating a business plan. Typically, our audience may be people in a startup mode. In addition to this type of presentation, I've had the privilege of presenting one that I call the strategic growth plan that typically is a discourse about a plan that is developed for an existing company. And most companies that are in being develop their own strategic plan as well. And these plans typically assess the growth opportunities for the company in existing and possibly even new market segments. They evaluate the market segments in terms of the opportunities and may identify a mode of entry into these markets by what we've termed the best acquisition, merger, or joint venture prospect. So we've often seen people coming from new developments within an existing company could very well be developing their own product or service, but often they're looking for some relationship, as we pointed out here. The end product of such a growth plan for an existing company, it could really be the sale of this company to a larger entity, or if things are going very well in the product or service offering, the possible IPO, which is really establishing a publicly owned company. So those are the mechanisms that we might follow in a strategic growth plan. The business plan is more basic than that, in that most of the people are in a startup posture. Let's discuss for a moment SCORE. It's a not-for-profit entity staffed by volunteers such as myself. Within the Chicago area, we have a little over 100 volunteers, and we have 9 operating locations throughout the Chicago area. In addition to these particular presentations through the webinars, uh, SCORE offers a mentoring service, and if I may, as depicted here, at no cost to the participant. So I strongly urge, and will do so throughout the presentation, that whenever the subject comes up, you really want to get a mentor to be involved with you who is an experienced person that SCORE has tried to select that has background in the area in which your product or service may be in being. And that person will work with you as long as you want them to work with you. And obviously, as we characterize here, there is no cost for your effort in that regard. Now, in addition to the webinars, which is the essence of what we have today, SCORE has historically had workshops which are physically presentations, normally at any one of the locations across the city of Chicago. I think as other than the downtown location where SCORE's headquarters is located, where the personal presentations could be made, the other locations often are done at libraries in various communities. Um, and that's the combination of things offering through SCORE, which is a global company offering throughout the United States this particular service. Can't get it to work. Okay. For a moment, let me just define my perspective on the business plan we're going to talk through today. Basically, it summarizes the business. Were there any history in the company? It characterizes the financial statements. And most critically, in any plan, whether it's an in-being company or one where it's been created, as many of you may be doing, it has a projection of financial statements. And that's the reference I made earlier to the pro forma financial statements, which are really those you create based on the concept of the idea that you have presented to the audience. We must obtain a series of answers to questions to develop a business plan. And the most critical one I find is one that suggests you're filling a market need. You've defined a product or service that meets the market's need. And the way we find out if it does or it doesn't, you'll see that I strongly recommend you're going to go out and do personal interviews or um, uh, rarely via the internet. I like a personal one-on-one, particularly if you're in the Chicago area as your market initially, and talk to the people who might give you a feeling as to whether your product or service really is meeting a need of theirs. Often, the product or service you've defined for these recipients key features, why it's special in the context of what it offers them, and if there are any limitations that may exist. And often these limitations exist because it hasn't been funded yet. So we like to believe that we resolve most of the limitations that a product or service may have when we're in agreement to fund the particular concept that you're presenting. Again, we're focused on a specific market segment, and these are the customers you're going to be serving, and they're pretty well defined for you. And then you've got to, in the context of the plan, characterize this market segment. Number one, you've got to estimate its size. Now, that's a very difficult thing when you're new at it, and you probably don't have any idea how to size it. Our experience in sizing it is we talk to competition. And basically, they're the last of the interviews you're going to do. Potential customers and existing customers, if you're in being already, are part one of this interview process, and part two are the critical competitive interviews. They are available to talk to you because, one, as a startup, they often don't know who you are. So therefore, they're not hesitating speaking with you. And two, you've got information from the interviews that were done with potential customers or existing customers of theirs that'll give them some insight on what they're doing or what they're not doing well. And therefore, you present that to them front end as you seek an interview. And our experience is the vast majority of people respond affirmatively to you and are available for a meeting with you if that's the case. Again, it can be in any mode that you wish, but it's not, from my point of view, submitting a questionnaire via the internet because you don't get a one-on-one play with them. Because what I've learned is many questions you pose bring you to different subjects because of the response from the people you're talking to than what the question really poses. So doing it in writing is a very difficult thing to accomplish. So I strongly recommend you identify potential customers or existing customers if you're in being in any way, and then go out and meet with them if you possibly can. And if you're in a distance away from where you may be, then obviously you're going to use the telephone, but not a written questionnaire. Okay? So when you go after the competition in terms of size, what we've learned is you sort of present an estimate of size. Frankly, you may not have any idea, particularly if it's an early part of your questionnaires. So therefore, of your people you're going to interview. So therefore, you create a number. And we found that the respondent reacts to it and even saying it doesn't make any sense. It could possibly be that large, or it's probably twice the size of the number you presented, but they respond to your number even though you just created one to gain their response. So recognize sizing the marketplace you're looking at is doable even in the early phases of your questions with the respondents because you're creating a number for them to react to. Then we talk about, and this will be key to the presentation as well, the pricing and distribution channels you're going to use. Normally, I found in a service mode, when your service offering is there, that it's direct from your people to them. But if it's a product, it often requires a help from a distribution channel, which can be distributors who might even have your product on their shelves, or merely they know they can get it and they will talk to you about it. So it's someone in a intermediate spot between you and the customer, and they aid you in selling the product. It often happens when the concept is a product. It doesn't happen nearly as often if the concept is a service. We insist that you forecast anywhere from 3 to 5 years in the future. And again, you're going to get help from the people you're talking to because you've offered something to them based on the results of your interviews, and the competitors will respond to it. Customers or potential customers typically have no feel for size of the market segment you're working about, nor the expected growth, other than suggesting that they consider it a very positive marketplace and one that is going to grow. The competition is your best bet for those types of questions. The competition, a critical part of your business plan, both in the prose format of it when you develop it and in the question and answer session when you're going to market to get information. You are bringing information to them. Recognize you've now done the interviews with the customers, and their customers are probably part of that group or those that you want to create. And they'd love to know what these customers have to say, particularly about their product or their service. So you've got that to offer, and that's really why they are seeking you and are willing to chat with you in some manner. Okay? And these questions, share of market, the changes in their market share, these are all questions that are answered by competition. I can pose a question to you as a competitor about all kinds of other competition that's in the marketplace, and you've got an opinion. And as I go to a handful of you, I'm going to get a multiple opinions, and often there's consistency with the questions being asked. And the estimates of size of market, the estimate of growth of market, the estimate of who's growing and who isn't growing, they're willing to discuss this with you. Because often discussion is about their competition, and they're very aggressive in talking about their competition, and often in a critical mode, but they will discuss their competition. The penetration that you're going to make in the marketplace is a tough sell. You've got to determine how quickly you're going to penetrate and why. And a lot of that will depend on your sense of the responses you're getting from the interviews. When the customers or potential customers respond favorably, you're going to guesstimate how quickly you can penetrate the market based on the feel that they've shared with you in terms of their likes or dislikes about your product or service. And then the piece de resistance is the pro forma P&L. It's a forecast of your direct cost, your fixed expenses, and then your profitability. And we like to define profitability in this mode as the cash flow. It is before taxes. We don't want you to have to get involved in creating a tax payment mode because people work very hard in mitigating your taxes. So basically, you want to present a cash flow as your final number. And then, as I alluded to earlier, you're forecasting over a 3 to 5 year period. The private equity people that I'm representing here in concept are basically people who often ask for monthly profit and loss statements initially, possibly for 12 months or 18 months, and then they'll go with a 3 to 5 year forecast. The banks, I think, are more liberal in this regard. They will ask for will probably live with the 3 to 5 year forecast. But ultimately, that's going to determine whether or not they're going to evolve a financial support of your idea. As we talk about your growth in the future, um, typically people have gotten themselves boxed into a hockey stick, namely one curve that starts flat and then goes up, often at a 45-degree angle. We reject that approach. We really believe that your pro forma should present three curves. A modest curve is the initial one, which presents what your gut feel is to where it may go. If you're really a believer based on the response you've gotten from both users, potential users, and customer competitors, an aggressive growth curve. And the other one is one if you're not getting a very positive reaction, but still a profitable reaction, it's slow. You will end up presenting a curve for your plan that is either one of those three or somewhere between aggressive and modest or modest and slow. That's your call at the end of your business plan. But it results from having presented three curves to the people reading your plan. Okay, and we talk about realism for pro forma. Recognize that if someone doesn't believe you possibly have a chance in the world of attaining what you're talking about, they're going to write you off very early in the conversation and ask for a meeting they're got to attend because the conversation is really over. So you've got to be reasonable in what you're doing, but obviously presenting what you believe is the reality of your product or service. Who is going to support you financially? Number one, yourself, if you could. Any third party that's a friend or relative of yours. Loans that you may get, which are often from the bank. And as you know, in bank loans, they're going to ask you to guarantee almost everything imaginable, including your home, your children, your wife, whatever the case may be, your husband. I'm exaggerating, but it's a very aggressive support the bank expects when they make an investment in you. The private equity group acts a little differently. They expect a winner as well also, but they're going to take a ownership posture in your company. And as I alluded to earlier, they may very well bring a third party on board to operate with you. So then it's someone to complement you in the business, but someone they believe has business experience in developing a new business and can aid you measurably, supplementing uh, the mentor that you may be getting from SCORE. The global opportunities are enormous. We had 8 offices around the world in our firm, and I always concluded at the end of any perspective I had on that, that the global market was much larger than the US market. The dilemma we face with it, each country requires its own business plan. And the reason for that is basically they have a culture that may be very different than our culture in the US. So as you're entering a new country, you've got to create a business plan based on their culture, not our culture in the context of it. And therefore, we think that's pushing it in the business first business plan you're developing. So we're going to concentrate this business plan on the US market. I'm sorry. We have a need to define your team. The dilemma you're facing is you may not know who your team is yet. And as a result, our suggestion is you list members of the team by title and by background that you expect, even though you have no names associated with members of your team. And in your write-up about the team members, you're going to talk about what they do for you. Why will this team succeed? Based on the background you've identified from what you want of your team, the skills and experience they may have, and therefore the number you're really going to add to your team to make it work. But remember, I, as a reader of the plan and a potential funder of the plan, want to know the kind of people you're going to bring on board. I don't need names because names wouldn't have any meaning to me at this point anyway. But I need background and what you would expect of the people that you're going to bring on board to you when you can afford to bring on these people. Now, the last comment I'm going to make in this early introduction is really what are the risks of your business plan? If I may, we all have risks and we all had risks in every business idea we've ever created. And we're going to characterize here what could cause it to fail. Are there product and service developments that you've got to create that you haven't done yet? What are the market issues because the marketplace you're trying to serve may be moving? What are the competitive issues? They're all probably a lot larger than you are now, and therefore you've got to know where they are and where their strengths and weaknesses are. And this you gain from your interview with the customers and potential customers. And ultimately, if there are risks defined that we all have when we're looking to start a business, the question is, how are you going to mitigate these risks? Meaning, what are you going to do about it to put them to bed so you can basically can operate successfully in the business niche you've chosen? Okay, as we get into the body of the presentation now, I alluded to again to this earlier, and the executive summary is the last thing you write. Historically, people aim for a single page. I argue you probably could get by with 2 or 3. You're not going to get by with 5 because the respondent is one who basically has a number of these opportunities in front of them. They will not read long executive summaries. But what they will do if they get turned down by one, they often give your presentation of the rest of your business plan to someone in their organization who's responsible for reading all the pages you've written. And what is the content of the plan? What are you initially? What do you want to do with your idea, the product or service you have? What geography do you plan to place it in? Is it the states across the board, or would it be just the Chicago area? And what's your background and the credentials of the people you're going to hire? And the question, obviously, when it's all done, is will it make money? And what's the magnitude of the investment or the loan that you're going to seek? and what's their revenue forecast over the period of time, and ultimately the profitability defined as your cash flow. And as the investor, how am I going to get my money back? So what we say throughout the plan now, the executive summary really summarizes all the sections we're going to discuss on the following pages. A characterization of the executive summary. It's a little bit of motherhood, I think, but it's real. Be positive about the business you're talking about. Act like you're enthusiastic in your writing of the summary. Be succinct because you only have a handful of pages. And then you've got to portray your command of the business environment that you're planning to enter. And you do that by characterizing it well enough that I'm a believer you understand where you want to go. Your business. Here's the description of what you plan to do, how you differentiate your product or service from others in the marketplace, the structure of your management team. And again, remember, you haven't hired any of them because you can't afford to do so, and you merely are structuring positions and backgrounds that you hope to ultimately be able to afford to generate within the company. The ownership of the company is pretty straightforward. How it's going to be managed is important. And obviously, as I alluded to earlier, the background experience of the management team. And then if you need a physical facility that's not a mere office, as it might be with a service, the physical facilities and where they might be located to make your product most likely function. Now, typically this applies to a product, and that is the technology you've evolved. Um, if I may, you're going to be facing competitive technologies that are either in being already or which have been created and are seeking market position as you are seeking market position. So understanding your technology and making sure the marketplace can respond to it in a positive fashion is a critical need in your business plan. The marketplace will respond to your idea, and they will tell you, most likely from what we've seen, that there are other technologies that have been presented to them as well. These are in some stage of development. They may be very well in the market already, or they're coming to the market, and you'll gain some insight on that subject because your presentation to the potential market is very comparable to what someone else doing the same thing has done or would like to do, and they will tell you a lot about what they've already experienced because they've got nothing to hide in this regard. What they're really seeking is an input from you as to why your technology may be more positive to them and meet more of their needs than others that they're discussing with you are in being. Okay? The personal plan, these are the people you'll require in your early phases of the company. And a straightforward question on absentee events, if they're not there, how do you fulfill for them? And then the order mode and how do you take care of orders that are placed with you. Okay, a critical section, again, I alluded to earlier, is your marketing plan. In essence, we're going to discuss here is your ability to get product or service to market. Okay, and the features of the marketing plan are pretty straightforward. The features and benefits of your product or service, the environment you're working in, which we'll elaborate on in a moment, the target market segments you want to serve, a definition of your competition, and we'll talk about it with a chart that I suggest you use. A value proposition is merely the concept that you're posing and their reaction to it. The way you price your product, which is obviously a critical need, how you're going to market your product or services, and ultimately the aggressive, modest, or slow revenue forecast, which produces that pro forma profit and loss statement, and ultimately the cash flow that's going to support my investment in your business. Characterizing the product and service description. What are the specific characteristics of the product and what does it do? What benefits does it offer me, the customer? If I had a need that you've defined, how does it serve that need? Obviously, if you're fortunate enough to have patent or patent being applied for, that's important to emphasize. Rarely at this stage in development have we found people who are in that mode. But if it's there, you obviously have to portray it. The value proposition. It merely is something that has been also called a position statement. How are you going to meet my needs as a customer? Your demographic and behavioral issue are people normally in consumer markets. But you also could have a product that's serving the industrial marketplace. The product and service benefits to your target customer base, those customers that you're going to go after, and the key strengths and weaknesses of the primary competitors. That's developed from the potential customer you talk to, because they'll talk to you at length about the people who serve them, who supply product or service to them, and give you a sense of how they view their strengths or weaknesses. And we found that when you hear it from one person, that's interesting. It's meaningful only when you've heard that reaction from multiple people and they happen to characterize it in the same manner. The target market segment. Where are you going to sell your product or service? The consumer market. Much more complex to define because it has all of these characteristics. The demographics, defined here as age, gender, race, education, income level, even location. The psychographic ones could be lifestyle, attitudes, values, and personality. Ideally, if you could afford it, this effort should be done by a consumer marketing company, marketing research company. Normally, at this mode in your development, that's not doable. You're doing this on your own, but recognize, understanding your consumer market is a complex entity. The business market or in the industrial market, if I may, seems to be easier. The same comparable size, same one is difficult to enter, but it's easier to define and to recognize the size of this entity, again, coming from competition, will give you their best estimate of the size of the market segment they're serving. And you're going to be talking to them about that particular size, the revenue and the location, whether it be Chicago-based or national in its location. And then the size of the market segment. Again, please recognize, as you starting out, you don't have the slightest idea of the size of the market you're facing. And my recommendation is, as you talk to the competitors, you're going to estimate size by reaching for a number, letting them react to it. And if you've got 4 or 5 competitors or more in your marketplace, try it on all of them, and you now have size when they start coming close to a number sequence. Remember, when we're talking size of market forecast, we're not talking about a number singular in 3 or 5 years. You typically will be talking about a range. It's 1 million to 2 million in size. It's 5 to 8 million in size. It's 10 to possibly even 15 million in size over a period of time over 3 to 5 years. And that's true of your penetration as well as the size of the market you're serving. So that kind of precision doesn't work. We had an amusing anecdote to that commentary in our firm when we often hired people who had engineering backgrounds as well as an MBA. And we had one who was an electrical engineer who successfully forecasted 3 to 5 years in the future to a decimal point. We were very impressed that any human being was capable of doing that. But if I may, if a client looked at that as a perspective, or if a customer looked at that, or a competitor, honestly, that would describe a naivete perspective on your forecast. No one is able to be that precise while talking about something that's going to grow in 3 to 5 years. So you basically will put ranges down that as tight as your range can be from the background you're getting from the marketplace. If you believe it could be 3 to 5 years, 3 to 5 million, ask your marketplace, the competition, how real they think that is. And they'll tell you. They either think it's on bar or they'll think you're way out in some way, either understating it or overstating it. So the competition ultimately is the party that's going to size the market for you, confirm a growth rate of the marketplace for you, but the strengths and weaknesses of this competition will come from the customer and potential customers that you're going to talk to because they've lived with these competitors over some period of time. The demographic data often relates to the marketplace and the characteristics I talked about often in the consumer market. The industrial organizations one can often get are many of the associations that are in being. And what I view to be the most critical ingredient of all of it is your market assessment or your market research. First, customers, potential customers. If it's a distribution mode, because it's typically a product, you go after distributors on your interviews, and then last, and always last, because you're knowledgeable at that point based on what the marketplace told you you're going to do your competitive interviews. Your economic forecast. If I may, I don't recommend you contemplate doing an economic forecast of the U.S. market. You rely on what the banks publish typically, or any other format that you can gain from the economic forecast of the growth of the U.S. marketplace. Demographics coming from a variety of social and cultural trends, some of it written, typically it comes from your interviews. And then one that I find the marketplace reacts very favorably to is your capacity to identify government regulations that are being discussed in Congress. They may not be in being, but there's something you have to be cognizant about because Congress is discussing making changes in your marketplace in some manner. Competition is probably very glib on that, and you want to discuss it with them because that's an ingredient of the plan you want to be able to identify. And that is what government regulations are being contemplated that could impact on this marketplace, either positively or so often as people say negatively about the government's intrusion on the marketplace. The technology changes we're going to face really come from third-party technologies that are being developed and have been presented as yours might be presented to the customer base or even the competition. But often their technology is not quite in the marketplace yet, but ones you're going to face as competition in the future. And then the discussion about the competitor. Who are they? Your customers are going to tell you that. What's their strength or weaknesses? The customers are going to tell you that. And I'll pose a chart in a moment that'll aid you in characterizing that position. A discourse a little greater the competition. The direct competitors offering products or services that are similar to yours, and you will face them as competition in the same market segment that you're going after. And some who are indirect competitors, namely, they have ingredients of what you're offering, not quite the same, but they like your market and they may very well choose to enter it much more aggressively than they are before because it's a growth segment in their eyes. And then the competitive strengths and weaknesses as depicted here. What makes them strong? What are their vulnerabilities? And that's true whether it be a product or service offering. The pricing, we'll talk about how to go about doing that. Your access to it, how do you get to market? Again, service is often our direct sale. Distribution is often a requirement in product sale. Your competitors' management experience, your customers, and the other competitors will tell you what they think of them. And you've got to make a judgment between just normal criticism of a competitor or real criticism or depiction of strengths and weaknesses and their posture on the financial strength of the competitors. And typically, other competitors are very glib to talk about their competitive sources. The chart that I like so much to aid you in defining your competitive strengths, competitor strengths, is this particular chart. The competitive features, here are general features. I often have you suggest if you've got a product discussion that's going to be competitive, define the characteristics of the product and let the customer base define you in terms of a rating. And I like, we've used a 5, 4, 3, 2, 1, 5 being a strong posture, 4, 3, 2, 1 depicting a diminishing strength of the posture. And we do that for each of the competitors that are meaningful in the marketplace. So through the competitive interviews, through the compact context of the interviews with your customer base, potential customer base, you're going to get input from them on their view of the strengths and weaknesses of your competitive sources. And you can define any feature combination you want to gain their reaction from it. And recognize they don't view this as a difficult subject to enter because they live it every day. They each have these perspectives on the competition and people who serve them as well. And they often are more than willing to share that with you because you're going to share this chart possibly with them and let them know where they stand in this situation in the context of the competitor posture of it and the customer posture of it. It's something you can offer if you say you need the help of the chart, or otherwise it becomes proprietary to you and you merely keep it for the benefit of your plan. Now, marketing. We talked about pricing earlier, and I view there to be at least three distinct pricing modes. The normal one that people operate in is they take whatever cost estimates they can come up with, they place a profit margin on their cost, and they've evolved the pricing. That's one alternative to it. We like to see you use a customer-driven pricing, and that again is talking to the customer base on what are they willing to pay. But please be careful with this one because customers lie about what they're willing to pay because they don't want to pay anything more than they conceivably have to pay for an idea that you've evolved. So they may not be very truthful in their response because they way low the product, much lower than the pricing they ultimately may be willing to pay. But they'll posture it for you as well. And then gaining from probably the only people you're going to gain it from are your customer base. What are the pricing points that they're paying? What are the pricing points that may have been offered that they've chosen not to pay? And therefore, what are the competitive values of pricing for each from the customers of each of the major competitors? You're forced, once you determine pricing, please recognize, at least in these latter two, you don't know your profit margin until you defined it as you would in the first one, where you've added a margin to pricing. So you've got to determine your profitability at each of the levels, whether it's a customer price driven number or a competitive based price driven. Okay, again, if you're using the distribution mode, you've got at least two layers of pricing. Your price to the distributor and the pricing of the distributor to the customer, each needing profit margins, and those have to be defined so you know what the profitability will be in the future. Price sensitivity is crucial in the context of if someone's prepared to give you a major offering, how will you respond to that major offering? Okay. And how would it change your pricing in the future? And you want to know what flexibility you might have in your pricing and what impact it might have on your sales. The repeat sales mode is interesting, and the one we all have to like as an opportunity is the razor and the razor blade. Selling a product into the marketplace that forces the customer to buy ancillary products or services as well is an ideal scenario to be in if you can evolve a product that has that physical stature to it. Then here's when you did talk about a discount structure based on volume. And then our favorite story of your competition. When you enter the market, please recognize that your competition is not going to welcome you to the marketplace. They are going to do everything they can to assure that you will not succeed. Some will lower their pricing to keep you unprofitable in the market because they're large enough to carry that off, or they'll come at you with a new product that hasn't been brought to market before because they want to compete with whatever you chose to bring to market. So there's no welcome to the market segment party from the competition. They're coming at you. And I would recommend you take a posture that if you were the competitor, what would you do when you come to the market? And with that posture, how would you respond to it? Then you would have some idea of what you're going to do if there was a competitive reaction. I'm sorry, of what they would do if there was a competitive reaction to the marketplace. So you're smart, you're bright, you know your market by that point. You can get a reaction to what you feel would happen when your competitor lowers their price on you or moves by adding a new feature to their product line that they didn't have before. And then ultimately, the last point is the point I just mentioned, is how would you respond to the changes in competitive pricing or competitive strategy? Please recognize if you're successful, they're going to come at you because what you'll be doing with your success is taking a share of the marketplace away from them that they've spent years developing. They're not happy campers with your success in doing that. So they're going to do everything they can possibly do to succeed in this mode. I had one experience with a client where a competitor came at them, and this was a client who was financially well off. And a competitor came at them and brought their pricing into levels that were below anything that this particular client could afford to offer. And the competitor basically thought that by doing that, they can force the client out of business. The client chose to compete directly with this pricing format and reach out their financial world to accomplish it. They did so and ultimately drove this particular competitor out of business because the competitor was choosing the price at a level where they couldn't really make out, and as such, neither could anybody else who would have to compete at that level. So you may find people entering the marketplace or people in the marketplace coming at you with even something we may view as silly as that, but that was a mode that one party tried to use to penetrate in the market and drive my client out of the marketplace. They weren't successful. Your promotion of the product. Our presumption at this point in a startup, as you don't have a great deal of dollars available for advertising. Couponing may be available. That's always an access for you. Your website is a must. You must develop it or have it developed for you. Personal selling, as I suggested earlier, by your sales staff, who we will hire after I or third parties fund you. The distribution organization that you'll develop, but something that you can do, I have in bold, and that's the PR and networking. We believe that you can write articles to be published in trade publications. You could offer to speak at association meetings. You can do things that you can do to motivate your product or service in terms of being a winner in the marketplace and motivating the ultimate marketing of the product, whether it be through your distribution or through your sales staff. But if you've got a winner and you have features of the winner that the marketplace would love to know about, this is a vehicle that you could use that is not high cost, but can be very effective when you have access to publications who look for articles or speakers who associations seek speakers who can talk about subjects within their industry segment. Direct mail campaigns exist. I'm not a great believer in it. And the frequent buy programs, I'm obsessed with them, as I've done personally through the um, airline scenario. I happen to have 4.5 million American miles, and that was a major ingredient of staying with American Airlines. So frequent buyer programs can be evolved and can be meaningful, and they have been that way for the airline industry. Others as well have come with that offer in terms of points or some recognition of your buying product in their mode. Budgeting for the marketing and sales campaign as part of your pro forma profit and loss statement is a vital item. Please recognize people tend to understate their marketing dollars. You only are going to be able to get dollars in marketing from the funding that comes from me, but basically, or from your bank if you choose to go that way. But basically, you've got to have a marketing budget of consequence to go to the marketplace and gain the sales level that you're seeking. Your sales forecast, we're to the area of the three curves. How large is your marketplace as best you've been able to determine from your discussion with your competition? What products and services are the customer likely to buy? What do they like about your features and what do they like about competitive features? What are the pricing scenarios you're going to use? And how quickly will sales evolve? And as I alluded to earlier, the business plan from the point of view of many of the private equity people who are contemporary of mine, and in the example of this particular presentation, might request monthly forecasts and then annual after the 18 months to 2 years. I often don't find the banks as aggressive in this manner. They require forecasts, but they normally don't require the monthly ones. But I've seen some private equity team pushing that very hard, and that's a tough estimate to come by. Okay. Um, if you're positive, if your cash flow does not evolve positively from the slow curve you're presenting, then you've got to continue out over time till it does, so that you have three positive curves, selecting either the curve, one of the three, or somewhere in between the aggressive and modest, or modest and slow, and that's your forecast in the 3 to 5 year pace. Excuse me. I'm sorry. Aggressive, modest, and slow again are the growth scenarios you're going to present. You then will pick one curve within that aggressive and recognize it doesn't have to be the aggressive curve. It could be a curve between aggressive and modest. It could be a curve between aggressive, slow, and modest. It could be wherever you want that curve to be, but it's supported based on your definition of the strengths and weaknesses of your product or service and the strengths and weaknesses of competition. The more detailed assumptions associated with sales forecasts normally are presented in the appendix, and a summary of it exists in your business plan. And then the key ingredient here, obviously, in the financials on your plan is how much money do you really need, and from where is that money going to come, and how will you use it? Is it a capital investment because you need facility? Is it purely working capital to get you started, as it often does in a service offering? Do you require R&D effort in a product mode? And we have some dollars set aside in the P&L pro forma for contingencies. Now, this chart relates to an existing business. We often find where funds may be available in terms of receivables, et cetera, but that's probably not going to be as relevant here because you're in a startup mode. And this also applies to increasing penetration from an existing business, and it's not as applicable to our startup mode. Okay, in this section, we're going to talk about the pro forma. And again, the pro forma relates to your futuristic forecast, whether it be 3 years, whether it be 5 years, whether it be a monthly forecast, whatever the case may be, it's your forecast of the future sales of your product or service. aggressive, modest, and slow growth scenarios, and I portray again where they are, what risk you may have had, in essence, the unknown that might obviate the chosen forecast you had, and how you're going to get investors to support your forecast. Okay. One area that appears often is someone working on a startup tells me that they hope to be compensated from the profitability of the business. I challenge that approach and suggest to you that in the pro forma you're going to develop, a compensation level must be in there for you and every one of the people you defined as those in your team. Remember, you don't know who they are by name yet, but you do have an idea of what level of compensation you're going to pay them. That has to be in the plan. And the reason for it, if I may again, is I can't take a chance on a P&L statement existing that doesn't include compensation to senior people in the company. Because if God forbid anything happened to any of you, you in particular, I would have a business that doesn't have enough funding to pay for a replacement, and then the business is in trouble because normally your compensation is the high end of all the others. So recognize in your pro forma, you must have an estimate of what your what your compensation will be each year. 3 to 5 year growth curve, modest growth initially, and then if you really believe from the marketplace's input to you that you can gain an aggressive entry mode, place it in there on the curve above that, or if you're not so sure based on the reactions you're getting, the slow curve. But recognize that all three curves should produce a profitability cash flow, profitable cash flow posture. Again, we're portraying here in an aggressive mode. You're going to add people to your staff, budget them, management support. It's slow growth. You may have taken some people out of your pro forma. But all three should be presented, and you will then select one that'll be your ultimate growth curve. And the similar concerns on the upside, downside of your cash flow and your loan needs, depending upon whether you're going aggressive, modest, or slow. Once you've established the three scenarios that we've discussed, you've pretty well defined the business environment to which you might operate. Now place yourself, as we often did, in the shoes of the client. Place yourself now in the shoes of an investor, namely me. And which one might I select based on what you can attain with the cash flow presentation you've made here? And key to that are your risks that you're going to face, and we all do in any concept of a futuristic posture. Define the risks and mostly define how you're going to mitigate them. What will it cost you to mitigate them? What challenges are these risks going to offer? Please recognize we all face risks in any business, not only a startup, but you've got to define what you define as risks that are there and how you're going to remedy these risks. Okay, as I allude to that in the last paragraph, conclude with a meaningful rationale for your selection of the growth scenario that you choose. Be specific at the time of expected cash flow, the money you're going to require from any of your sources, and the payback that I can get from the scenarios you develop for me, and the payback that you're going to get as the portrayer of the concept. Now, the action plan. Things you have to do now, things that can be set aside for a little bit of time, and some that are really not important and can be delegated to somebody else. I'd like to create a time calendar on accomplishing certain tasks and follow that calendar so you gain an understanding of how you're doing against the required tasks that you have in front of you. And then ultimately, there are tasks that you may not have to do, delegate it to anybody else on the team you're creating. I believe you should make your calendar a working document, consult it, use it because you created to define your future needs and future goals and future accomplishments. How well are you doing against those forecasts? Then, basic 101, write the plan. I portrayed a lot of uh, efforts that has to be done prior to writing the plan, but we don't want to get caught up on making that a lifetime event. The writing of the plan is ultimately the most critical part of what we're undertaking here. So get it done and use the time you have available to gain the support of the plan that I've suggested earlier. Business plan, as we define it, is a tool to accomplish two things. If you're existing, get your business in order, or number two, get financing for your idea. And whether that be product or service, you may need support dollar-wise, and this is going to portray how you're going to get financing because it's whether I believe in your plan and whether I believe in you. The business plan is not the business. Don't make it a lifetime project. It has a finite time frame to it, and with the help of your mentor, you can get it done in a reasonable period of time. And I won't put a time on the word reasonable because I don't know what that really is. The format of the business plan, I happen to like the one I proposed to you, but SCORE has multiple formats available in its website. And Google has plans available in many, many concepts available through templates at Google. So the template that you use is one you're comfortable with, not necessarily the one I portrayed here today, but it's one that I happen to like and have seen success with it in the past. Something your mentor should be able to contribute a significant amount of effort towards is redundancy. Your plan size becomes very long when you don't recognize redundancy in what you're portraying. Third parties can do that. Only third parties who aren't related, who happen to believe that it has to be a good plan, but someone who's willing to critique you as well, and your mentor is fully willing to do that. So again, remember from the beginning of this presentation, the mentor is a volunteer who's associated with SCORE and is available to you at no cost. And with you, as long as you and the mentor, primarily you, believe he or she is contributory. Okay, some mistakes that are typically made, and we all are vulnerable to mistakes. Uh, you don't have a focus on the marketplace. I had one party who came to me in these SCORE discussions and had three concepts he was bringing to market simultaneously. As much as I was impressed with that concept, I don't believe I know too many people that can accomplish that effectively and profitably. So I suggest you have a business vision of one product or service that's relevant to your idea and promote that to the marketplace and see where it'll go. Okay? Not spending enough time to define your potential market. Don't rely on your friends telling you it's a great idea because they don't want to hurt your feelings. Get your marketplace as I portrayed to you today, your customers, if there are any to date, or surely your potential customers, and you can define them readily, I guess, if you know the kind of product or service you offer, and your competition. Now, if you're in a product mode, the technological threats of other technologies coming against you is crucial. Make sure you've read them all about the marketplace and listen to what your customer base says about other technologies that may have come in front of them by people doing what you're doing, and that's evolving a new technology for entry into the market segment you're considering. Not understanding your customer needs. These are meetings with the customer. They're going to tell you what they like or don't like about your product or service. They'll talk about how it fits their needs in terms of contributing to their product or service offering today and why it makes one and one equal three or one and one equal four in the context of what they have and what you're offering to them. They're crucial. The competition is crucial squared, but these are interviews that you must undertake. Your competitive position, I've talked about that at length. You've got to know a full understanding of the depth and breadth of their position in the market. The other competitors will give you some sense of that. But you're basically you're not going to get that from the customer base. They are not good at giving you size of market from the point of view of any one competitor's position. They're either big or little or sort of medium, and they'll give you a lot of feel for their strengths or weaknesses, but not their size. Then you often see people underestimating their market costs, their operating costs, and surely overestimating their revenue. That's why I like the three curves. And the high end often is the aggressive one, and then you've got to portray why that's going to happen. And often it isn't just that curve, it's someplace between that and modest. But you're going to be struck with the challenge of estimating growth and rationalizing that estimate. So I believe in enough to want to invest in your idea. Because remember, your plan is for you to operate your business, but crucially, for someone to put dollars behind your idea. And they only want to put dollars if it's going to be profitable and they believe in your rationales for it. So that's basically the characterization of it. And then other ideas we have is you run believing that you move into it too quickly. We see people who are great believers in their idea and don't take enough time to understand the market they're going to go after, but they really believe because it's so good, the market's waiting for them to come there. You don't know that till they confirm it is. Please recognize you're not the judgment of it, they are. You're the judgment of the concept of the service or the product idea, but they are the concept believer, yay or nay to whether you're going to make a meaningful contribution to their business. You're not writing a realistic business plan. Obviously, a position as this is the essence of today's presentation that you're going to miss dramatically. Okay? And if you're not going to listen to guidance you may gain from your mentor or others who you believe are um, closely aligned to the capacity to make a critique or critiques of a business plan. I always am concerned about relatives and friends because they rarely want to see you fail, and as such, their criticism of what you've done may not be as aggressive as it should be. And then ultimately, you're going to be overwhelmed by the legal requirements to get your business in place. It requires dollars, most of it coming from us in terms of the private equity people or even your banks, and it requires often a great deal of work. That summarizes the perspective we've had on developing a business plan for a new product or a new service. And I haven't seen any questions posed here, but if there are any at this point before we wrap up for the day, please posture them and they'll be transmitted to me as well, and I'll be pleased to respond.
Hannah, I am searching for the questions. I'm just going through them. It's not so much questions, it's just comments about our entrepreneurship program and will this be posted? Okay, here we go.
A question was posed here that what are the concerns about building a business that ignores certain groups like people with disabilities? The obvious answer, I guess, is one that they haven't understood the marketplace. Because if people with disabilities are a meaningful part of the customer base, potentially even a competitive base, um, they must include them in their analysis. So really understanding if they're serving something that people with disabilities can utilize, again, whether it be a product or service, uh, we've got to be very cognizant of this niche's response to the idea that they're bringing to play. Could be a meaningful market and all surely one that's got to be considered if it's relevant. Commentary was saying forecasting based on a 3 to 4 year period without considering inflation in this regard. Inflation is often built into the forecast of any one of the people we're talking about in terms of the growth. The competitors will talk about growth in the marketplace. It typically will include inflation if inflation's a factor, because that's going to be their forecast of market that they're going to serve in the future. So I'm not sure they're going to isolate inflation as an ingredient of it for discussion purposes, but typically, as they've lived in an inflationary environment in the past, they're going to talk about an inflation environment in the future. If it's meaningful, as we're talking about a 5% inflation now, we could really be recognizing that be an ingredient of discussions with the customer base, particularly your competitive base. What's the best way to forecast 3 to 5 years? I have a year, but I can't see 3 to 5 years. My experience with that is really your competition. As I alluded to earlier, when you come to them, remember you're an educated party at this time because you've interviewed a significant number of customers and potential customers. And when you get to them, now you're getting information from your future competitive base and what they have in the context of it. And they're going to give a feel for what they think it might grow 3% a year for the next 5 years, 3 to 5%. I like that range estimate again. So not 8%, but a multiple level of range. And that's all they can do. That's what anybody can do as they're forecasting every business plan written in a company. They're going to forecast 3 to 5 years, and they got to do the best they can by putting a range in for what they believe revenue can be, including what could be the evolution of inflation if it evolves. Someone has asked a question about grants. I'm sorry, there's a second question, a question about balance sheet. I can't read it. Can you drop that one down at all? Because it's up too high and I don't have something about the P&L balance sheet. So I'm going to go to the question I can read, which are what are the qualifications? Where can I look for these grants? We're talking about grants. In this case, I don't know if we have a product or service offering that's grant motivated, but a loan motivation may be possible, or an investment through somebody like a private and the private equity entity, such as the one I was trying to portray, may be possible. I'm not in the grant mode to believe that that's going to be accessible to you as readily. But surely, if you can look up grants relating to subjects of your product and service and see what's available in the marketplace. Our friends at Google probably have a discourse on that subject as well. Thank you for a comment that looked like a summary comment to thank me for my knowledge and wisdom. I hope it's contributory to you in the context of what you need. Just recognize again, as you evolve a plan, you've got to understand your marketplace. You can't presume you do. You've got to let your marketplace aid you in understanding them, what their needs are, and whether your concept a product or service serves their needs. And then, of course, that competitive discourse. This was a question about the P&L statement. How can we count the raw land purchase in P&L? That's going to be an asset. You're going to have a requirement of cash. If you have to purchase land to build a facility that's going to probably be manufacturing a product, it's one of the ingredients of cost in the investment that you're going to have to get from me to support this purchase, whether it be hard assets such as the building or land, either one may require this ingredient, and I'm the one that's going to fund it as part of your grant. Remember, as you're posturing your P&L statement, you're going to have the land cost built into it because it's part of the investment you're going to request from whoever is supporting your finances. So I thought of a 501(c) for grants as I build a company and then start an LLC. Is that practical? I assume grants are accessible. I don't know. A 501(c) is probably a not-for-profit entity, and people will support not-for-profit entity. Because if I may, let me acknowledge something about not-for-profits. My first job was with a not-for-profit entity in the city of Chicago as part of the Illinois Institute of Technology, and I think they call it Illinois Tech Organization. It was not-for-profit as well, but honestly, they generated as much profitability as a goal as anybody in a for-profit mode. They had to support themselves. The advantage they gain is because of the end product of where the money goes. It doesn't go to shareholders. It goes to growing the entity. And Uncle Sam has permitted that to be a not-for-profit and a non-taxable base at that point in time. So that to me has been the distinction of the not-for-profit play and the 501(c)(3) as well. Is a something C3 practical considering you can't get grants? I don't say you can't get a grant. I just don't know the grant mode because I've not been involved in getting grants. But I would go after Google and look for grants on the subject of what you have or in association that may relate to the subject of the product or service you're doing. They probably can aid you in where grants are available by companies. The assumption here says that you can't get grants. I don't want to make that a presumption. I'm not offering that to you. Because I present these, I've chosen not to be a mentor at this point in time. But if there are continuing questions about the presentation that you need clarity of it in the future based on things you're doing or contemplate doing, you're more than welcome to contact me at that point. And you probably will have to work through SCORE to get to me, but it's doable. And if you wish to do it, I'd be more than happy to respond. I'm not a mentor, though. Yep. And how to get to a mentor is, as depicted here, is chicagoscore.org. And SCORE will share a mentor with you based on your needs of the product or service you offer and the background of people in that 100+ organization of volunteers that they have in their portfolio. One of the ingredients, I'd like to add that before I cut out fully, Anna, is one of the ingredients of the measurement of the success of a chapter such as the Chicago chapter by SCORE National is how many jobs did the businesses that they supported generate. So recognize that that's a critical need that SCORE has, and therefore SCORE is going to do everything they can through their mentor of supporting you and your success in the business world. There's a question somebody named Sylvia has generated, and I don't have a question. My question, please, is all I can read. Is there a, how can we count the raw land purchase in the P&L statement? That was a comment that we're seeking. It's not an operating cost unless you got a financial cost of having purchased the land. So then it's really an interest cost that you're going to have, or a cash flow cost in terms of your P&L statement. Okay, how should we estimate the potential land acquisition? We're back to the land question. I think you've got to look at the area that you want to acquire and where you want your business to be. I assume it's a product business in this mode, and therefore, what are the land, your real estate entities should be able to help you with land costs in the geography that you may seek for your business. My company is a digital marketing company. I want to help people also. So I thought of a IC3C, but they can't get grants. I'm not sure it's a question. It sounds more like an observation, and I'd accept that. If you wanted to buy a brick and mortar, that's part of the investment you want me to make to support you. And that is, if you're buying just a building with equipment, you're probably buying therefore an existing business. You're acquiring a company going in, or you're finding one that's failed and has their equipment and their hard assets such as land and building available to you. On the job issue, interesting enough, scores, mentors, and score were able to generate 412 new jobs in the last year. And the question is really, do you locate in the same area as your competitor? I don't think your location versus your competitor is a critical issue. If you find reason to be in that area and you feel there's an availability of people in that area, then you go for it. Some may come from your competitor, in fact, depending upon how much they think of your product or service being an offering. So I think your location is your location based on the needs of your market and the needs of your servicing your market. I'm not going to worry about where your competitor is located. I think Hannah is summarizing Bon Voyage. Thank you all for your time and your questions. And again, as you work through SCORE, if you have further questions about this presentation, I'll be happy to respond. But utilize your mentor first, and the mentor will be very meaningful for you as well.
Thank you very much, Aaron, for your presentation and your time today, and thanks to all of those who have attended. This webinar will be posted on the Chicago BACP YouTube page sometime this week, if not by Friday. Please check our YouTube page by Monday. If you are a part of the BACP Certificate Entrepreneur Program and would like to receive credit for today's webinar, please send an email to bacpoutreach@cityofchicago.org. Hannah, do you have any last thoughts? You're on mute, Hannah.
Can't hear you. Are we pretty well there? Thank you.
Thank you.